Hi, my name's Anna Serin. I'm Director of Listings Development with the Canadian Securities Exchange. You're joining us for a CSE podcast. We are starting a new series, so you're welcome to the first episode of our new series. I will be joined by our colleague, Garrett Lee, who is partner and securities lawyer with Lawson Lundell. Thank you for joining me, Garrett.
Thanks so much for having me, Anna. This is great.
Absolutely. Okay, so the new series is going to be, we're going to sit down quarterly and we're going to talk about what's happening within the capital markets for venture-focused issuers and non-venture. And we're going to talk about market trends that you're seeing. We're going to talk about regulatory trends you're seeing and general updates that we're seeing in the markets that's coming down from the regulators, right?
Yeah, absolutely. Let's get into it.
I'm excited about this because we talk about this a lot. And I think that this is going to be really valuable to our issuers and to our community to be able to hear some of the stuff that's happening directly from the legal corner.
Yeah, absolutely. I mean, Canada has a very unique, venture company ecosystem, which is, unlike most places in the world. And, where there's always changing regulations, there's, changing interpretation, the market's always shifting. So I think it would be incredibly helpful for issuers and capital markets folks to be live to these changing issues and trends.
Absolutely, absolutely. Okay, so we're going to start off today by talking a little bit about some of the financing trends that you're seeing. Obviously, you work with many issuers that are listed on the CSE and other exchanges in Canada, and you always have a finger or a pulse on their financing activity because we need legal counsel to help us through those processes. So let's talk about some of the financing activity trends that you're seeing. Let's start with the private side. So you're seeing certain things on the private side of financing. What are you seeing?
Yeah, so we take a lot of our cues and trends from what's going on south of the border, and so with capital markets and access to capital being difficult for the last couple of years, what we're seeing is a lot of different companies, especially in the tech space, trying to get creative with different financing options. So one of the big ones we're seeing is the increase of venture private debt. That's much more robust, and that started in the U.S., but we're seeing that creep into Canada a lot more. And really why that's really great for a lot of companies, especially in the tech space, is it allows for a little bit more flexibility than maybe traditional financing methods. So we're seeing that becoming a lot more prominent with some of our private tech companies. And then what we're seeing a lot in the U.S. are Bitcoin-backed secured loans, which I think if we were to talk about that a couple of years ago, it would seem asinine that this is even a thing. But in the U.S., they've actually built out a regulatory framework for this, and essentially what that allows for is companies that hold Bitcoin or other crypto assets to pledge that Bitcoin as collateral for a loan.
Right.
And so, the benefit to that is, it allows them to get liquidity, but also, they're not actually selling or disposing of that crypto asset. Now, again, that's much more common in the U.S., but with more and more issuers on the venture space starting to hold crypto assets, we're now getting a lot of inquiries from companies of, whether that's an option in Canada. The reality is our regulatory framework's probably a little bit behind, and so we need some adjustment on that, but I think that's certainly something to keep an eye on in the next couple of years as a real financing alternative for some of our issuers.
Absolutely. Okay, so I guess my first question there would be, there is a lot of inconsistency with the valuation on cryptocurrencies. So is this something that is a more speculative or viewed as more speculative way of financing using cryptocurrency as the lender? I mean, it can dramatically shift in its valuation from a day-to-day basis. So it's intriguing to me that this is getting used as a lending tool.
Yeah, and it's a good point. It's a good question, and it's something for borrowers to keep in mind because there is an increased risk element to it. With the volatility of crypto, it could result in liquidity issues or, a call on the loan quicker if there all of a sudden is like a sudden dip. So that is something certainly to keep in mind, and is a bit of a, higher risk loan play.
Yeah, absolutely. Is there any anonymity with the fact that it's lending is coming from a cryptocurrency place, or is it like a standard lending agreement?
It would be more of like a standard lending agreement. Yeah.
Okay. Okay, let's talk about the capital markets and the financing activity that we're seeing there.
Yeah, so it was a lot of doom and gloom the last couple of years, but I think we're happy to say we're starting to see a light at the end of the tunnel.
Okay.
So as you know, 2023 and 2024 were pretty bleak.
Yep.
But I think there's signs of optimism coming into 2025. I think seeing the numbers for the first half of the year, month over month, we're seeing increased financing activity, especially in our venture markets.
Yep.
Private placements are still the primary method that we're seeing issuers fund. And so that's a chance for us to be optimistic about where our markets were going. There's a variety of reasons for why that could happen. It's continued strong precious metal prices, lower interest rates, but also we're seeing changes to certain regulations, which are kind of providing a bit of a kickstart to our capital market. So, for example, very recently, there were changes made to the life offering capital limits.
Yep.
So the increase now is to the greater of 25 million or $20 million or 20% of a company's market cap, and that's subject to a $50 million raising cap over a 12-month period.
Okay, I'm going to stop you there. Let's step back for a moment, only because it's something that we've been seeing quite active over the past few years. But let's just remind our audience what the life offering is. So how long has it been in play? It's been 3 years?
I think about 3 years, yeah.
Time is hard to, I think it was mid or post-pandemic.
Yeah.
So the life offering is a listed issuer financing exemption, right?
Yes.
But we refer to it as the life offering. It's a way to allow for companies that have already been listed for at least 12 months to be able to go to market and raise capital. It allows the issuance of the securities that come from that financing to not have the traditional 4-month hold that a private placement does, right?
Yeah.
And it also allows for, it's meant to be an easier mechanism, right? As far as the corporate governance or the paperwork required for it. Is that right?
Exactly.
And disclosure?
Exactly.
Okay.
It's really meant to bridge the gap between, a traditional private placement, which is less paper intensive, but has a 4-month hold on it.
Less legal costs.
Less legal costs.
Okay.
Less paper intensive, less administrative costs, but comes with a 4-month hold on the securities that are being issued, and a full prospectus offering, which are going to be more legal costs. There's regulatory review. There's more administrative, work involved in preparing like an offering document of that size, but that's free trading shares. So it's kind of meeting in the middle that allows issuers to issue free trading shares. There is a disclosure document that's associated with it, but it's a much scaled down disclosure document.
Right. And the benefit, I think, I think there's a really key element to the free trading shares versus the 4-month hold period. And I think it's really important when we have markets that are in a bit of a flux. It's really valuable for people, not that we want people investing in companies and immediately going to market to sell their shares, but we want them to have the ability to take advantage of swings and just to have that liquidity because it creates ease in the investor, right?
Yeah, absolutely.
Yeah.
And and it gives companies optionality, true. And like we were saying before, it's sometimes the capital markets need a bit of a kickstart, and with the venture space, there's such quick swings that issuers need to move quickly and take advantage of financing opportunities when they're there, and this kind of allows them to do that rather quickly.
Right, and more attractive to get investors in if they're getting that liquidity.
Yeah.
Okay, so that's the basis of the life exemption. Now maybe just touch on, there are some constraints within the life exemption, so you have to be listed for 12 months, and then maybe if off the top of your head you can just remind us some of the constraints around it, how much you can raise and in what period of time.
Yeah, so with the changes that just came out, so the limits that they have now have increased. which because of that, we're actually seeing now a lot more issuers contact this and consider a life offering, which is great. So now the limit has increased up to the greater of $25 million or 20% of the company's market cap.
Right.
And that's subject to a 12-month limit of $50 million on the raise.
Right.
And then there's also a dilution limit, which again, in that 12-month period, you can't be issuing more than 50% of the company's securities.
Right, which is a standard percentage.
Yeah.
Okay, and Garrett, can you just touch on the requirement around, I believe there's a certain amount you have to complete in a first tranche of a life offering.
Yeah, so if you structure your life offering where there's going to be a minimum threshold that you want to raise, and if the intention is to maybe close in multiple tranches, then on the closing of your first tranche, you have to have raised enough money to fulfill your forward-looking 12-month working capital requirements.
Okay.
Otherwise, you won't be allowed to close.
Okay, and this is something I get asked often, so I think that's really important for clarity, because sometimes people are trying to do it in, sometimes it takes 2 or 3 tranches to close a financing. Make sure that you have that 12-month working capital in your first tranche while doing it. Okay, and the reason that they've increased the limits on this is because this has been a successful program, right?
Absolutely.
Yeah.
And the whole intention of it, again, is to kickstart our capital markets and encourage issuers to utilize the life offering. And so far, it's had really great reception and has worked. Like I said, there's a lot more companies now that are commencing discussions about utilizing the life offering.
I also like, rewarding the issuers that have gone through the go public process. They've made it through their 12 months. Whatever sector they're in, they've accomplished 12 months of their business model. They're ready to go back to the market, and it kind of encourages them and provides, an additional benefit to them to make it there and be able to go and raise more capital easily.
Yeah, absolutely.
Yeah.
Our Canadian securities laws have evolved in a way that, some people would scoff at the idea of the prospectus. Back in the day, the prospectus was a much smaller document, and now it's kind of grown.
How big is a prospectus?
I mean, it all really ranges. It depends on the industry of the company.
Sure.
It depends on if you're doing a long or short form prospectus. But it could get up to hundreds or multiple hundreds of pages if you're doing a really full long form prospectus. And so there's always a question. We look back on history and say, well, how did we get to this point, right?
Yeah.
And when you look at investors, especially savvy investors, really like, is there a way that we could just distill down the material information for a reasonable person to make an investment? And I think that's what the life offering document has done, to really make a more concise document that is really condensing the important information that an investor needs.
Well, and I think too, it's valuable because you had touched on the increase in activity in private placements. And private placements, I'm curious if we'll ever relook at what the accredited investor requirements are, because it does leave out, a very large base of investors when you are only able to access accredited investors. And I think this allows an opportunity for other people to participate, without kind of falling under that one exemption.
Yeah, absolutely.
Yeah. Okay, so that's great to hear that we're seeing an increase in both of those. I'm happy to hear that the life offering is, getting picked up and people are utilizing it more and more. I know that at the CSE we're seeing lots of financings. They're not all necessarily big financings, but they're financings that are helping an issuer move forward, with their program or corporate governance needs. It means they're still able to go to market and raise capital. So that kind of stuff, it keeps things percolating. Yeah. Wonderful. Okay, good to hear. Okay, let's talk a little bit about ESG and some greenwashing enforcement. You joined us at the CSC's 3rd Annual Summit on Responsible Investment in Kelowna. Thank you for being a sponsor of that and participating in the event.
Oh, it was an honor. It was a great event, and some really phenomenal issuers and speakers, and we were just happy to be a part of it.
Yeah, thank you. Well, we love it, and we know it's very well received. But there is always this evolving evolving content around ESG and greenwashing. And I feel like every time we visit this conversation, there's either a new regulatory framework or, I was told this year when we were putting the event together that ESG is kind of a bad word now, and people don't even like the word ESG. So there is some new enforcement and regulatory framework that is coming out. Talk to us about that.
Yeah, so it was changes to the Competition Act, which occurred in 2024. And so I guess taking a step back, before these changes, I think many would consider that actually Canada's regulatory framework relating to ESG practices maybe we're lagging behind a little bit to comparable jurisdictions like the US and Europe.
Yep.
And so really what these changes did is they kind of changed the theoretical, concept of our ESG practices and what we're trying to accomplish to, real world and enforcement. And so now there's, pretty significant penalties for greenwashing and putting out misleading information about a company's social and environmental impact relating to their services and products. For example, I think penalties can be upwards as high as $10 million or 3%.
Wow.
They're
getting serious.
They're getting really serious, and 3% of a company's global revenue. And some pretty high profile companies have kind of been been the target of some, ESG claims, like we've seen, like, Lululemon and RBC. It's something that I think issuers of all sizes need to take note of.
Yeah.
And that, they're not just going after the big companies, but even down to the venture stage clients that, this is now putting in a regulatory framework that is actually going to enforce these practices.
Yeah, good. Well, I mean, and we talked about that at SORI, which was, if there is an ESG program, do your due diligence. What is the program? If there is a relationship with local First Nations, what is the relationship, right? I mean, it's also up to the investor to make sure that they're figuring out what those are and protecting themselves in their due diligence practices. But it is nice to hear that there is some framework being built around it, because I feel like some of it was buzzwords, maybe getting overused.
And that's absolutely it. And there, companies are having increased pressure too from investors to start disclosing about their ESG practices where appropriate. Like, I know if the CSE, for example, doesn't have mandatory ESG disclosure, but we're seeing, especially on the institutional investor side, that companies are getting pressure to include that in their public disclosure. And I think that's something for boards and management to be mindful of and really start paying attention to the disclosure that they have out there relating to these practices, because, I mean, they really should be treating it no longer as an aspirational thought of, we want to be doing this.
Sure.
You should treat it as any other, prospectus type disclosure where it needs to be factually true and supported by data.
Risk factors, safety factors, on and on. Wonderful. Okay. So I'm sure that this will continue to evolve and something that we might continue to discuss. Okay. Let's turn to the CSE.
Yeah.
So the CSE has some new hold period rules. We will be also doing a segment with our head of compliance, Alexandra Cosgrove, so you can check that out as well, and she'll dive into that. But let's talk about these hold periods and explain where they affect people. So tell us about the new default 4-month hold period.
Yeah, so I mean, this is a pretty big change coming from the CSE that I think a lot of issuers need to be mindful of. So now, as a general practice, so all securities issued pursuant to prospectus exemption require a 4-month hold period. And so where, from a practical standpoint, where we're going to see this really impact issuers is on like the M&A side.
Right.
Previously, there were certain prospectus exemptions that certain issuers could rely on in an asset or business acquisition, that the shares that they were issuing would be free trading shares.
The shares issuing to acquire an asset?
Yes, absolutely. The shares being acquired or being issued would be free trading. And so now that's no longer the case. I mean, it's subject to certain exemptions that are in the CSE policies, such as if the issuer is qualified as a NV issuer, If there's maybe
NV non-venture.
non-venture,
Yep.
sure. If there's, a prospectus level disclosure document that accompanies the acquisition, like
That happens at an IPO, for example.
yeah,
Okay.
exactly. Or even as part of the acquisition, like a information circular or
Sure.
a listing statement or something
Okay.
like that. As well as certain security issuances that are either at or above the company's current trading price.
Right.
So,
And that's at or above the day that the securities are issued?
yes.
Okay.
Yeah.
Okay.
So so the big takeaway is that for companies is that if you are planning an acquisition, you really need to know the acquisition. You need to make sure that you're speaking to legal counsel,
Sure.
and you're understanding what sort of hold periods and restrictions are
Yeah.
going to be on the securities, because now the expectation that the vendor, the shareholders or company are going to be getting free trading shares.
Right.
It's that's changed.
Right. And just also, I think in the way things are structured is it's really important to have an understanding of that before you structure a
Yes.
transaction, because if it's issued at market price or above market price, shouldn't cause an issue. If it's being issued alongside prospectus level disclosure, shouldn't be an issue. And even if it's being issued at a discount, just having an awareness that it's being issued with the 4-month hold attached, right?
Yeah, absolutely. And
Yeah.
I think that really signals the key is to make sure you take the time up front when you're structuring the deal. I know, working in the venture space, and everyone likes to move quickly, and like we said, like the markets can shift. and
Absolutely.
I'm sure you've seen it all the time that
Yeah.
a deal comes in and you need to get it done as soon
Yeah.
as possible.
And they do have to, right?
Yeah.
I mean, I'm amazed at some of the efforts that our issuers have to go through, because when a market is, in a place where it's percolating, things are happening, you got to move quick,
Yeah.
right?
Yeah.
And they do, and you guys as the securities lawyer community, it's amazing what you guys can accomplish. But having a really deep understanding of how these things are being treated is really important.
Yeah, absolutely.
Yeah. Okay. So this is new, and I think it's just come into play. So we'll see how that transpires. Again, just to touch on that, anything under a current exemption would be treated differently. So like we just talked about the life offering, that'll still remain free trading paper, or if it's done via prospectus and so on and so forth.
Yep.
So that will not change. Okay, let's talk about IR disclosure and compliance. This is something I get asked about a lot as well, how IR activity is treated and disclosure around it. So what's going on there?
Yeah, and I'm sure it'd be obviously interesting insight as of the exchange, because you're getting I'm sure there's a lot of interaction with the different securities commissions, the OSC and the BCSC on this, but
Yes.
what we've really seen in the last year and a half is an increase in compliance audits that our issuers are getting from the securities commissions, and so usually that comes in form of a comment letter. And one comment that seems to be popping up relatively often is focusing on companies' IR disclosure.
Right.
And so the BCSC put out a staff notice on this, and really was kind of just reiterate their stance that it's very important when companies are putting out promotional material.
This is BCSC Notice 51703?
Yeah.
Just in case people want to go read it.
Yeah, absolutely. Yeah. Good. We encourage everyone to, especially this notice, to read the notice. But a lot of the comments we're getting, and it's kind of a reminder to issuers that when you're putting out promotional material, it needs to be very clear in the promotional material that this is a paid advertisement,
Okay.
and that this is promotional material that the issuer is essentially promoting. You can't really bury it in fine print somewhere or,
Right.
or in the back. It needs to be very obvious.
Right.
And so we're seeing a lot more of those comments coming out, and it's important to keep in mind too that it's not just with news releases, right? Like it's includes what's on the company's website, it includes
Okay.
investor
Oh,
decks.
Good point. Yeah.
But what's also very interesting now is that with the emergence of different media sources like social media, YouTube, TikTok,
Yes.
Instagram, and the use of influencers to promote companies, it gets included in that as well.
Disclose.
Yeah.
I mean, look, I it is a very dynamic, shifting world that we live in the capital markets, and a lot of these online platforms can be used for good to get your story out there.
Yeah.
right? And I would like to see our issuers do more of that, because it's the way that people and investors are digesting their material.
Yeah.
So let's meet where they're going to be. But I think really it just, from my understanding, is it just comes down to any kind of promotional activity, IR activity that you're doing, tell the market.
Yeah, absolutely. Absolutely.
Tell the regulators, tell the exchange, tell the
Yeah.
market, and you should be safe, right?
Yeah, absolutely. And
Yeah.
and you know the plug is, you know, always work with your legal counsel. Make sure that you're
Always
running
work with your
runnings by
legal
legal
counsel.
counsel. And it's funny because it's always the the age old struggle between legal and the marketing team. Is they always say lawyers like taking the sizzle out of the steak.
Yes.
And, you know, we're not trying to, you know, we understand that there's a, you know, an element of showmanship and obviously
Yes.
marketing that goes into it, and it's needed.
Yeah.
But you know, all as important to that is to make sure that it's compliant. And what issuers really need to be mindful of is that even the paid promotional material that goes out there, that it forms part of the company's disclosure record.
Yes.
So you are responsible for what goes
That's
into
right.
these paid advertisements.
And market integrity, right? I mean, it's, you know, that's, I think, maybe one of our most important acts, all participants within the market. You know, what you do is your role and me as my role, and the issuers and the activity that they pursue.
Yeah.
Is market integrity. Okay, so pay attention to that and disclose. Okay, we are going to finish off with the CSA staff notice 51-366 on M&A scrutiny. So let's talk about some more oversight that we're going to see on acquisitions. Tell us about that.
Yeah, and I'm sure it's also a hot topic, and I'm sure you know, one that you guys are dealing with internally a lot at the CSE. But really, I mean, the staff notice again is kind of to reiterate, you know, the regulator's position and kind of concerns about, you know, an acquisition of companies that may not have real value in them, and so
Yeah.
it's to really protect against these kind of pump and dump type deals. And so really the transactions that get flagged the most are the ones that are going to, where they see that the issuers are issuing a large number of their securities
Yep.
for a company that may not have any sort of real value in that company.
Right.
And so, you know, the problem with that, I guess the practical takeaway for that is that, once again, you know, management and issuers and board members need to be aware that, you know, regulators are starting to crack down on
Yeah.
this.
They don't crack down on real businesses.
No, exactly. That's a very
that
good
have
point.
real good business plans and
Yeah.
have great expansion opportunities.
Exactly. Yeah, that's a very good point. And where we've seen an increased scrutiny, you know, in these type of transactions, especially if we're dealing with a CSE company, is ones that are either, you know, structuring their deal as an acquisition or as expansion of their business, which either gets close to a change of business or a fundamental change, so is either there or maybe you know, doesn't quite hit that.
Yep.
There's getting a lot more questions into you know, is there actual value? You know, what is the
Yep.
business being acquired? Is there actual value? How have you determined value in that
Yes.
business? And again, the whole idea is really to protect, you know, in investors and make sure that you know, there's not unnecessarily dilution, and as you said before, to protect public interest, you know, and confidence in our markets.
That's right. I've had such a good time chatting with you. I'm such a geek for this stuff. I'm really excited that we're going to do this quarterly. If people have more questions, where can they find you?
Yeah, absolutely. So feel free to reach out to me. My email is gwlee@lawsonlundell.com. You can find my contact details on our website, or reach me on LinkedIn. But yeah, it's been amazing. I really love how this series that we're starting, and yeah, this was great.
Okay, and I'm also going to ask to viewers if they're welcome to reach out to me if there's certain topics you want us to break down with Garrett. Please reach out to me, let me know, and we'll make sure we include it in our next session.
Yeah.
Thank you, Garrett.
Thank you.